3-1 advancing the declining stocks. We got some positive talk about the China trade. That Reuters article was passed around very widely this morning. But the main thing is bond yields stop going down. That just stabilizes the market right there. So just take a look at the sectors here. Again, we're going into the close of a phenomenal quarter, one for the record books. Look, banks, you get stability in bond yields, you get banks moving up. Even the Russell 2000's up. Retail's been a real great performer in the last couple of weeks. Semis have been a great performer for the month. Also up today. Energy's been great too, but it's kind of flattish right now with oil now below $60, down about $1 there. When I say it's been a great quarter, I mean everything is up. This is very strange. This quarter for the S&P, the best quarter since 2009. But I maintain a simple portfolio of ETFs that would be an investment for an average person. So you buy the S&P 500, the Russell 2000. You buy a little bit of high yield. You buy a little bit of corporate bonds. You buy a little bit of treasuries. You know, 60-40 stock split. Everything is up. This is very unusual to see every little possible class you would want to own as a 60-40 stock bond split up for the month and up nicely. And this does not include the dividend appreciations. This is just price appreciation overall. The gains are very broad-based sector-wise, so tech is leading. Everybody loves it when tech stocks move up. Put that next one up there, 17%, 18%. Energy's up 15%. Industrials, which got slammed in December on global growth concerns, that's up 15%. So all the right stuff, the cyclical stuff, is moving to the upside. So you put it all together, what does all this stuff mean? Well, it means that 90% of the S&P is up this quarter. That's a pretty strange statistic, too. And let's go back to that 60-40 stock bond split. If you had that in that ratio with those ETFs I was mentioning there, you're up 9% for the quarter. That means if you had $100,000 January 1st, you have $109,000 today with a 60-40 stock bond split. That's pretty good, folks. I don't see that very often, not that kind of move. So, of course, we're all concerned about the future, and we need to talk about where we're going to be going now from here. But just reflect for a minute that everybody's done pretty well this quarter overall. Finally, let's talk about Lyft. I am very happy they're getting higher prices. I'm very happy that investors are enthusiastic. But let's just reflect a little bit about why this is happening. First, the stock market's up 12% in 2019. That's the most important reason everybody's getting excited. The IPO market's been closed for months, 4 months essentially. There's a lot of pent-up demand out there. They floated a very limited supply of this stock. What, 13%? It's not an awful lot here. We got a well-known company. I'm not being Debbie Downer. I'm just saying, everybody take a breath here. Remember something? Let's just look at the revenues here for Lyft. $2.2 billion in revenue, put up the next one there, and losses of $911 million. So that's not nothing. Take a look there. And it's not just them. WeWork, nobody paid any attention to WeWork yesterday. They released documents. Did you see what they had to say? They're going to go public too. $1.8 billion in revenues and $1.9 billion in losses. That got a few eyebrows raised a little bit. And what about everybody's favorite company, Uber? Well, all right, obviously it's not as bad, but revenues of $11 billion, still losses almost $2 billion. I'm not being Debbie Downer. I'm just saying, look at this. Now, I know everybody doesn't like talking about what happened to Facebook, but can I remind everyone how enthusiastic the world was about Facebook? When was that? May of 2012, I believe. What did it go public at? 38? It went to 20. 3 months later, it was at 20. And a year later, it was still struggling. It wasn't until the middle of 2013 that Facebook really turned around. And the initial investors, the retail investors that we care about, you guys, started making any money. I'm just saying, let's give it all a few months before everyone gets too excited about the IPO market. We're just off the highs for the day. David, back to you.
And you were Debbie Downer there a little bit. Come on, Bob. I mean, Snap and Twitter, I get it, but there's also Alibaba in there. There have been a lot. I mean, I understand your point. Focus, understand the potential growth possibilities and the losses and everything else. I get it. And watch for the aftermarket performance near term and be careful,
we
right?
have a very unusual situation, David. We never see 230 IPOs with valuations here. We may be hitting $1 trillion valuation on some of this stuff. It gets close if you put everything together. That's a lot of stuff to put on the market. And all I'm saying is wait till the first 50 or 60 of these IPOs happen 3 months from now. I just want to see before we all get too crazy. Remember, David, we're on the side of people buying the stuff.
No, understood, and holding it, and the companies like that as well. Bob, thank you.